What's going on, guys? Welcome back to another episode of Hustle with JesseW. And you might remember a video I made well over a year ago titled Why I Don't Trade Like Warrior Trading Ross. That thing created a lot of buzz. And guess what? This video is why I still don't trade like Warrior Trading Ross. You're not going to want to miss it. Check it out. Do me one quick favor, guys. Make sure you go over to hustlewithjessew.com and sign up for my newsletter. It's just once a week. It's free, and you're going to want to definitely sign up for that because it's just once a week. There's no spam, and any new stuff that I'm going to come out with at all will be on that newsletter, and you always want to stay tuned to that. Also, remember, if you appreciate these type of videos, this type of content, if you like my channel, make sure to smash that like button for me. It helps out because it feeds the YouTube algorithm, and then it makes these videos go up on the suggestion feed, which makes the channel grow. And last time that we grew, as soon as we hit 10,000 subscribers, I give away $500 to one lucky subscriber. There's an entire video where I did that, and it's on the channel. So make sure you check that out if you're new around here. All right, guys, so let's go ahead and jump into this video here. Now, before we do, let me explain two things. One, we're going to go over that video I did a long time ago, well, probably over a year ago now, on why I don't trade like Warrior Trading Ross. And I'm going to show you why I still don't trade that strategy. Now, before we move any further, let me also explain what you're seeing there in the background. This is my long-term swing account. I just started this one this year after I maxed out my Roth IRA. I also have another long-term account. I decided to establish a new long-term account that was just in order to take advantage of the market crash we had back in March. Now, unfortunately, it depends, right, how you look at it. We had that crazy bounce, V-shaped recovery, and wasn't able to continue adding how I thought. I thought we were going to kind of like lillygag near the lows, and it didn't allow me to continue adding throughout the year. Although now we are experiencing some major volatility and some major drops, and I'm definitely going to be adding to this account specifically here. I already have some money set aside, and I'm looking to add probably a little bit more Disney, a little bit more Boeing, and looking at a couple of other stocks I'm considering adding here to this account, and really looking forward to that opportunity now. But now this video is not about that, so let's move on from that. If you want to check out more about that, I have a beginner's guide to long-term investing in my playlist section, so check that out. Now, as far as that goes, the next object here, or the next subject here, is that video that I did last year. So let me show you that one real quick. So here you have it. This is the video, and this is the video where I went, and talked about the warrior trading strategy. This is a video from July 4th, 2019. That's awesome, Independence Day. That's when I put this video out. So it's from last year. So it's been over a year now since I put this video up. It has 156,000 views. Let me boost this up here a little bit. You see it, boom, 156,000 views, has 4.7 thousand likes and just 462 unlikes. And in this video here, I discuss different charts. As this one right here, you can see failed high a day on CCCL. I've been told since this video has, been over a year, I've been told that Warrior Trading Ross has changed his strategy around a lot. I don't really know because I don't follow him anymore. When I first started trading years ago, that was one of the very first channels that I watched. And this video isn't here to bash Ross or anything like that. It's just simply to reinstate my opinion about this specific strategy that I talked about in that video. I can't speak to his new strategy or how he's adjusted or modified his old strategy. I have no idea how he's done that. I don't know. I don't know how he trades. I really don't know. Other than any glimpse I'll catch scrolling through YouTube, and I'll see some, thumbnail. Other than that, I don't know what he currently does. So I can only speak to this video that I did back in July, and the way that he was trading back then and before then, I would imagine, was the standard scalping, breakouts. Okay. Apparently now I've been told in the comment section of that video right there that he buys a lot more dips. In fact, I've been told that he's trading a whole lot more like how I trade, only he still does it on the 1 minute, whereas I do it on a bigger time frame. And this is not a video saying my strategy is better than his or his is better than mine. No, it's none of that. This video is just talking about my opinion on these high-a-day breakout strategies I don't know if he still trades them or not, no idea, but I do know that some people do trade them out there. And it's the same thing. You can see here a failed high day break. You know, people would buy that. You know, this is the high day right here. People would buy that, looking for continuation to the upside, only to get, boom, rejected back down, and then they get stopped out, only to then have the stock find support and boom, on the way to new highs. And as you can see here, there's plenty of support in that zone there. But let's go ahead and exit this video here and move on over here. A couple examples I have here for you. ANPC is one. And I'm going to show you here on the 1 minute chart, because I took criticism in that video from some diehards and some people who are probably very, very new to trading, saying,
"Oh, Ross isn't trading on the 3-minute chart. What are you doing on the 3-minute chart? Unsub, unlike."
Like, that's what I was getting, right? Well, okay, all right. I'm going to talk to you on the 1 minute chart. ANPC, here we go. This was one of the big gappers today. Like, you can see this thing got from 320, had a pre-market high of up here over $5, so that's pretty beastly. And this morning it opened up, and here I'll show you. And like I said, this is a strategy used by many scalpers that like to buy breakouts. Okay, and here we go. Watch. They'll use the pre-market chart, and then you'll see here the open. Let's double check right here. The opening bell. This is the first 1 minute candle. Okay, then let's see if you can make sure. Here you go. 1 minute. You see it right there. The bell rings, and this stock opens up at $4.15 and immediately shoots all the way up here to $4 and almost 30 cents, only to get slammed right back down to what is this, 396. Huge like range, boom, on that 1 minute. You know, the volatility was amazing. Now people will be like, okay, so what would somebody trade here? Well, some scalpers, okay, would have traded the break of this previous like support zone right here, that when we broke underneath it became resistance at 420. They might have jumped in there at 420 and tried to ride this up for a quick 10-15 cents, maybe less, maybe more, just depending. I mean, I understand that they would typically buy that breakout right there and hold to see if they test, you know, at least this prior pivot right here in front of 440. It doesn't quite make it there. It doesn't even make it to 430 and before it gets rejected. Now, some people might have made money on that. Absolutely, they might have bought that break right here at 420, and they would have scalped it all the way through to 425, kind of 5 cents, 10,000 shares, $500. But not everybody's going to make money on that, because it's a chaser strategy. They're chasing the stock higher. So there's people buying at 420, 425, thinking it's going to 440. There's people buying it right here in front of 430, thinking they're going to break and anticipate the break of 430 to move up over to 445, 450, that pivot that we saw in the pre-market. Now, the point is that that type of trading, especially right there at the bell, makes new traders specifically. That doesn't mean that doesn't make other traders nervous, but it makes new traders specifically very nervous, because they're buying this stock as it's squeezing. They're just buying, 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 buying. And then all of a sudden, they don't really know where they're going to stop out at, because they don't realize where's their support. They're buying the first 1 minute candle of the day. This stock hasn't even developed a support zone. Now, typically what people will do when they use this strategy is that they'll buy, and then they just have a standard, like static 10-cent risk, 5-cent risk, 15-cent risk, 20-cent, whatever it is. They have a risk in mind, and they'll buy their share size based off of that. And then what'll happen is, you know, maybe the stock works out and squeezes up higher. Maybe it doesn't, and it flushes. And there's the problem. Then it flushes, and it's difficult to get out within that risk that you have preset. But worse, almost worse than that, is that then you'll have the stock find support in an area and take on off without you. Because what happened was you bought this momentum that was just like all over the place, okay? On a 1 minute candle, you don't even have hotkeys, and you know, you can't take it. Like, this is how new traders get caught holding the bag. This is exactly how new traders get caught holding the bag. You know, all the way back down here. So now there today, for example, there weren't a lot of stocks moving around. I took the day off and I tweeted why. It's a personal thing with the family, and I was sitting here working. And I decided, you know what, I'm going to put out another video on the subject just because I saw today and I saw all these like momentum type setups that somebody would chase, especially a new trader, and then get just destroyed on it. And I hate when I see on Twitter, these traders that just started out with a $2,000, $2,500, $5,000 account, you know, and they're like, oh my God, I lost $1,500 today, you know, because you were oversized, you were chasing momentum. So these are the reasons why. Now, there was a whole lot of lack of charts out there that I can use for examples. That's why I just showed you the ones I just showed you now. But what I want to do is I want to show you in the video itself a little bit of a clip from that video that I made last year, and you'll see it right here. So scenario one right here is failed high of day breakout. We see this more often than not, especially during the summer months when the market is really choppy and volume is really light. So what you see here is this chart here, CCCL, made a real big nice move here right at the open and went from like $1.40 all the way up to probably somewhere near this $2 area. And what happened was we set a new high here. And then this next candle, these are 3-minute candles, this next candle, so you imagine the 1 minute how choppy that looks. So this next candle opens up, dips down, breaks through, makes a new high of day, pulls back instantly, and then chops around here just under 180. Then we have a new high of day made right here. However, it's a failed high of day breakout because we didn't continue to push. We didn't consolidate here and then push. We pulled in all the way back down. So if you bought the break over this candle, like many of these people teach you, you would have been stopped out if you weren't quick enough to take whatever this is, 5, 6, 7 cents of profit. Buying these breakouts, it's a scalper strategy. It really is. You have to be extremely quick, have extremely good hotkeys, and direct access routing guaranteed for sure. You need that. And then you got to fight every.
This is eToro, the leading social trading platform.
Every other scalper for these pennies. Okay. So then we have this pullback. Then we have a new push onto a new high of day on weaker volume than before. And then we have a continued failed and a fade. So this just continued to fade. So if you're buying high up here to sell higher, you are putting yourself in an extremely stressful situation. Being able to buy the pullback, okay, into a support zone, especially on a larger time frame, gives you more confirmation. If you wait for confirmation, obviously, you can't just buy something that's falling. That's called, you know, buying a falling knife. You never know when it's going to stop. So you want that confirmation to establish itself. And then that gives you a clear, definitive area where you can stop out of. And then that's your stop. And then you have your predetermined targets where you're going to sell it as it pushes versus just, oh my God, it's breaking out. I gotta get in. Market order in, market order in, market order in. Let's see if it keeps going. It's keeping going. Then you get nervous. You get hyped. Your finger hovers over the mouse button or the hotkey, and then all of a sudden you're so nervous you just click it by accident because you twitch because you're so nervous because you're probably in on huge size. And by huge, I mean everybody's size in a trade is relative to them and their risk tolerance. It's about your personal risk tolerance. And that's something that can and does grow with time. My risk tolerance today is not the same as it was when I made that video. Obviously, the videos I put out today, as far as my P&Ls go, are not the same size they were back then. Back then, they were much smaller. You know, if you've been watching me this year, you've seen from January 1st all the way until today, November 2nd, November 2nd, how my trading has exploded in different ways. I don't just trade small caps. I trade small cap, low floats. I trade large caps. I trade options. I trade futures. And I put it all out here on the channel with live recordings and you guys can see them. Okay. So it's just something that changes with time. This is about one and their nerves and their, you know, how nervous they get when they start trading. You put yourself buying these breakouts. And like I said, this isn't a video to knock Ross. Never. I have not done one video like this that's knocking. You know, that's like bad mouthing. I don't do that. But this is a video talking about that strategy. Now, like I said at the beginning of the video, I've heard that he's changed that strategy. I don't know if he has or hasn't. I don't care. It's irrelevant to me. The man is successful at what he does. I'm just talking about that you guys that are new and you're buying breakouts, you're putting yourself in situations that make you very nervous and takes a whole lot of skill to develop. And you're doing it with live money and you're just doing yourself a giant disfavor. You really should look into buying pullbacks, learning that a little bit more. It's a lot less stressful, okay? It's a lot less stressful. And at the end of the day, what this video is for is like for you new guys, like I'm telling you, you have to just be very careful on the strategy you pick. And until you find the strategy that you are comfortable in, I would say always trade in a simulator. Once you're comfortable in the strategy and you've proven that you're profitable in the strategy in the simulator, then and only then, in my opinion, that's all this entire video is, my opinion, is look into trading small live cash money, trades, very small. Very small, because if you were trading, $100 risk per trade in the simulator, and now you're going to go cash, actual money, you're going to trade the same risk. It's going to be very difficult. So I would say bring that down, $25, $30 risk, and slowly creep it back up to the risk that you traded in the simulator. Guys, this trading stuff is difficult enough as it is to learn. When you start, don't try to chase the get rich quick stuff of like buying breakouts that you see all over Facebook ads and Instagram ads and these TikTok people that are traders. It's terrible on TikTok. I spend sometimes like 20 minutes on TikTok just like, no, that's bad information. No, that's bad information, and here's why. No, that's bad information, and this is why. Because I can't imagine these new traders when they get out there and they find this information that's bad. I'm not talking about Ross here. These videos on TikTok and stuff like that, that's just bad information. Oh man, it hurts me. It hurts my soul to know that they're following that. And then as far as these breakouts go, they're very difficult. It's not as easy as some people make it look on YouTube to buy these breakouts. And buying a breakout, remember, not buying the pullback. I've heard they buy pulls back now, a lot more. Great, awesome. I'm talking about buying breakouts. And there's tons of videos on YouTube about buying breakouts, and you literally have these people telling you, okay, the high is 230, and they're telling you, I'm going to buy the breakout at 230, and you're thinking, okay, I'm going to buy the breakout. You end up getting in at 235, okay? The thing dumps after it hits like 245 all the way down to 220. They sell at 245, and you're still like, what just happened here? I'm down, $200. What happened here? Be careful, guys. Remember to subscribe to the channel for me. Hit the notification bell if you haven't, so that you're alerted when I upload these videos. Comment in the comment section. Let me know what your favorite strategy is, and I'll catch you on the next one.